Good morning, everybody. This work session on AO 2017-75 unit lot subdivisions. I am John Glepton.
Big Train.
Lou Peterson.
Forrest Dunbar.
Dean Assistant Council.
Red Dice.
Suzanne LaFrance.
Felix Rivera. Christopher Constant.
We can get the audience.
Sean Odell, Planning.
Chris Schutte, Office of Economic and Community Development.
Barbara Jones, Municipal Clerk.
Mark Schimsheimer, AWOO.
Tim Potter, Dell.
Jim McCollum, Attorney.
Gina Ashman, Interpreter.
Seth Anderson, Engineer.
B.G. Atherton, Denali Federal Credit Union. Tara Tefloff, Banker.
Tyler Robinson, Community Housing.
Mark Clark, Lucy Corpus, Alaska.
Everything that you said, Jenny Carly, Title.
Okay, thank you. And I understand Chris Schutte is going to do a PowerPoint, and then we'll work with some other people who participated. And you can ask questions maybe after each person talks.
Yes, thank you, Mr. Chairman. I'm going to introduce the topic today and then just serve as a Vanna White while other presenters with a lot more knowledge do the actual talking. We do encourage questions during the presentation, though, so that we can address all of those in our hour of time. Can somebody dim the lights? Kathy Ganago? Can you dim the lights, please? Yes. Thank you. All right, so by way of introduction, just a real quick overview of what we're going to cover today. We want to give you some background information on how this work came to be, then dive into the specifics of what unit lot subdivision is, why it's a beneficial alternative housing type, where are some sample projects across the country, and where are some good lots to do it here in town. And then we'll dive into the ordinance to give you an overview of that and wrap up with any questions. But first, the genesis of all this. So just about everyone in this room on this side of your table is involved in the AEDC Live, Work, Play initiative. This is AEDC's movement to make Anchorage the #1 place to live, work, and play in the country by 2025. One of the key focus areas of that effort is how do we address housing and housing issues. The Live, Work, Play Housing Work Group is co-chaired by Carol Gore from Quick Inlet Housing and Tim Potter from Dow. It has, at any given time, 20 to 30 different public and private sector members, all of whom are working to address the housing challenges that we face in this community. One of the challenges that we face is a lack of available land to build our traditional single-family models that we see across this city. And we're interested in looking at what other communities have done to address the housing supply and demand issues. And so one of the areas that we focused on is alternative housing types. Alternative housing types can range from ADUs or accessory dwelling units, mother-in-law apartments, to the topic for today, which is known as a unit lot subdivision. Tim, as co-chair, is there anything you want to add to that?
No, I think that's it. I think that the Assembly should recognize that you'll be continuing to see a variety of topics coming forward from our committee through AEDC for you to review. And our goal is to really try and address the housing issues both from a quantity and quality standpoint, look for alternative methods and means. Just like today, the unit lot subdivision is not the end all. It's not the only answer. It is just another tool to look at putting in the toolbox that is workable and usable and the appropriate tool in some conditions and appropriate settings. We'll continue to interface with you.
Great, thanks, Tim. By way of background, the unit lot subdivision ordinance that you have was about a year's worth of work, I want to say. It was a subcommittee of the Live, Work, Play Housing Group that included most everyone you see in the room today, but also included Erica McConnell, Dave Whitfield, Hal Hart, a couple other people that couldn't be with us today. So just wanted you to know that it was a collaborative community effort with input from utilities, real estate, construction, planning, etc. With that, we'll dive right into the unit lot subdivision. I'm going to hand off the microphone as it is to Seth, if you want to come on up and talk through it. And just tell me when you want to advance slides, Seth.
Okay. Yeah, so go ahead to the next slide. Just a kind of a quick introduction. And as I go through this, feel free to interject and ask questions as they come up. The unit lot subdivision, the basic idea is you take an individual development site and instead of limiting the development to a condominium or an apartment building, you can further subdivide the development site into smaller unit lots and sell the townhouses or condos as fee simple units instead of a condo. Go ahead to the next slide, Chris. Some of the characteristics of it, from a zoning perspective, the development standards and land use applies to the original development site. And then internal to that, the lot lines can have some more flexibility on how you line them up. There can be nonconformities on the individual unit lots. They don't necessarily have setbacks other than building code required fire separations. Some more just overview of them. Because they're typically on tight sites and access to them is limited, where you park your car might not be on the unit lot that you own, but it would be memorialized through an easement or an agreement with the other unit lot owners. Common areas or shared use areas is probably a better word for it because there is no technical common area. But shared use areas, easements, and the outdoor area would be recorded by an easement. The opportunities are it's another product type, it's another housing type, it's another way to think about getting some more housing in infill areas. So some of the benefits, going through pretty quick. The benefits to the buyer of what would traditionally be a condo or a townhouse. They have lower mortgage interest rates compared to single-family homes, compared to condominiums. The unit lot subdivision would have interest rates that are similar to a single-family home. Their insurance premiums could be cheaper, and it's another housing type. It's more opportunity. And the other bigger benefit is that, say you had a development site that could have 6 or 8 townhouses or condos on it. There's a financing change that happens from 4 to 5 units. You typically don't see more than a 4-plex until you get to a 10 or a 12-plex. So using a unit lot subdivision, because you don't have that financing hurdle, you might see or encourage more of the 5 to 10 unit developments instead of stopping at 4 unit developments. It's an economic construction type. Benefits for the developer. The absorption period in your holding cost is going to be less. With a condominium, you have to have 50% plus one of the buyers of the units with committed buyers before you can get conventional financing. With a unit lot subdivision, you can sell them off as the buyer comes and they're available. So their risk is less, and their holding costs are going to be less because they're not waiting for those initial group of buyers. There's also favorable financing for a group of what is more or less single-family homes compared to commercial loan or electric. The Title 21, the development standards, they apply to the original parent site. So there's really no change to Title 21, and there's no impact to a neighborhood as far as you're not changing what would normally allowed to be built, the size or the scale or the type of use. And mixed use is kind of an interesting one. Typically, mixed use is in apartment buildings because of how financing works. Conventional financing, it gets a little bit tricky when you're working with in a commercial building for residential financing. So you usually see mixed use in apartment buildings. With this, the commercial amenity could be on an individual unit lot, so it would be separate from the other ones. So you could have condominium or ownership opportunities within a mixed-use project. Some of the financing benefits, I hit those in the last slide. Yeah, go ahead. And some just kind of case studies or scenarios of where they might be used. If you have a lot that's multifamily and physically you can fit on the site 6 or 8 units, and with the unit lot subdivision, you can also go to the next slide. Unit lot subdivision, you could also fit 6 or 8 units. It would probably be a good option for the developer and the potential buyers to pursue the unit lot subdivision. If you had go ahead, Chris. a lot where you could fit 12 or 15 condos or apartments, but in the unit lot subdivision, you could only fit 5 or 6 unit lots, just the way the configuration worked out. Then the additional risk for the developer might outweigh the benefits of the unit lot subdivision. So typically, if the number of unit counts is the same for the unit lot subdivision or what would be allowed with the condominium or you could build a condominium, then it would be a good opportunity. The ideal locations, when we looked at them, we were typically looking at infill sites in previously subdivided neighborhoods. And access is going to be one of the biggest challenges for vehicles and pedestrians. So corner lots with alleys, or lots with alleys would be the best opportunity as far as access and flexibility in how you configure the site. There is good examples of just strictly an infill lot without an alley, just a street frontage and making successful access projects. Running through kind of scenario. In Anchorage today, we have a condominium option or an apartment option. We don't have the unit lot. So if you have a site that could be developed as a 6 or an 8-plex, because of the financing issues that we talked about and risk of sales, what we typically see and have seen is a 4-plex that we see all over Anchorage, pretty similar to this one. Next slide. If we had the possibility for the unit lot subdivision, that gap or that limit of 4 units to 5 units could be broken. We might see, something a little bit more attractive. There might be some money in there to afford the landscaping at the end of the project, or afford, an upgrade package to the facade. This is actually an actual project in Seattle. Seattle and other communities along the West Coast states have been using the unit lot subdivision for over a decade. There's lots of good examples in those cities of some successful unit lot developments. In LA, where they've been doing it for a while, an example of a 3-unit unit lot subdivision, but strictly in infill. Another one from LA, trying to get the idea that we're not just trying to encourage additional housing, but a different type of housing, a different type of product that could be available.
Sorry, the slides are kind of tough to see on the projector. They do look great on the screen, though.
Another unit lot subdivision in Seattle. This one has pedestrian and vehicle access through the center, and then it opens up to an internal courtyard where the front doors for the additional 4 units off the back are accessed. It lends itself well to starting to think about cottage housing. Traditionally, a cottage development would be a condominium, association that manages the common areas. Because they're detached units, which the unit lot subdivision allows, instead of having these as condominiums, they could be fee simple, and you could see some of the same benefits that we talked about earlier. Just more examples. The next few slides are just examples of projects throughout the West Coast that we've seen that are all unit lot subdivisions. And then in Anchorage, like potential development sites that we've looked at, in Fairview and South Edition, there's a checkerboard of empty vacant lots that have been vacant for 20, 30, 40 years, and you've got to ask yourself, why have they been vacant for so long? This site I actually know personally, and it's vacant because you can build a 4-plex, you can be really basic and cheap, not a real asset to the community, other than it's providing 4 housing units. And some people don't want to do that. That's not the style of construction that they're into, or what they want to provide. Get the unit lot subdivision, it could make developing these vacant lots more feasible.
You have a question here?
Yeah, I have just a quick question for either of you, but I'm curious about the notion of it being fee simple. And I kind of understand what you're talking about with the financing and the different way to make the units look, but what real benefit to the owner is there in having fee simple? Fee simple in the traditional understanding means you can do almost anything within the code on that land. So you can knock down your house, or another house, or do whatever. But I assume with these kind of things, there's pretty strict rules on doing that kind of thing. Is that right?
Yeah, typically the site would be developed as one project and have, restrictions, yeah, maybe hard for him to answer.
Well, one of the big benefits of fee simple is the financing, especially when Mr. Homeowner who buys into a condo project and that condo project has like 51% renter occupied properties, they can't get financing for that anymore. In this situation, that's not going to apply. That person will be able to sell their home whenever they want to. They won't have to wait for the homeowner association to qualify for FHA or some other type of financing.
Add one more thing that that's a, I don't want to get legalistic, but condos are fee simple.
Right.
This isn't a fee simple distinction. People think of it that way because it's not a traditional lot.
But you don't own the fee simple, you don't own the ground of the condo of the fee
Right,
simple.
but you own your
the
defined
inside.
boundaries in
Right.
fee simple.
So I guess I'm still trying to understand if there really is anything beyond I'm still trying to understand what the benefit is to the owner to now own that land in fee simple. Is it just a financing, or is there practically more things that they can do?
But
with that land?
there are psychological advantages to it. I mean, it's something people are going to be wanting, but the main issue is going to be the financing of it, and it's a big issue.
John?
If I could add to that I represent a lot of, virtually all the developers and condos in the state. It's a problem when you're developing a project, how much risk you're going to take. So what this does is allow you to build more units with less risk, because you don't have to wait until you get a certain number of pre-sales to sell your first unit. Whereas if you build a 4-unit townhouse style development, you would have to have 3 sales before you can close your first sale. That delays you, your construction interest is running, so it adds to the risk, which slows down development.
And raises the cost. And if I can add, of course, that one of the things that we're seeing from a long-term standpoint is that you've seen a lot of duplex condominium projects when they actually could have built a 3-plex or a 4-plex on that lot. So we have to be very careful as a city that we want the density in the right locations. And when we have a financial influence, that's a regulatory and banking influence that is driving people to make a decision. Do I want to try and put the number of units that really should be here for the next 50 years? So the city gets the best efficient use of their land over time if we have a restricted amount of land. That the decision is often being made that's either too much risk because I get drawn out, maybe I can't get my third buyer lined up so I can close on the first one, and they settle for a duplex. So then all of a sudden we might be developing at 50% of what our plan says we want to build in the locations close to downtown or in those neighborhoods. So all the reasons that we say in our comp plan we want to have density and circulation, we've got these other regulatory risk and financing factors that are influencing a lower density of development, and that doesn't get us anywhere because we're locking up that piece of property for probably at least the next 50 years, maybe longer, so that we can't respond to the density in the future when we really need it. So we really need to look and consider our land in town, that we need to try and make it easier for people to build to the plan that the city wants.
Okay, so of course, to follow up, then Brad and Pete and then Greg.
So yeah, I actually, I agree with all that. I've read through this. I'm already sold. I'm actually trying to sort of understand it a little bit better. So if I'm getting questions to the community council and that kind of thing, I can answer them. So my follow-up then is, that a few slides ago you showed, you could have 4 or 5 of these, any of those would work. So if you go, any of these would work. So could you, well, this one actually doesn't, but the other ones, okay, that one. So if you were doing these as separate financing by unit, does that mean you literally could just construct them, construct 1 or 2 of them, and then wait to get the others and construct others, or do you have to still construct all of them at once?
You could do a phased development.
So you
You
could-
could build them 1 at a time or 2 at a time.
Yeah.
And do that. So you have that flexibility. possibility, but one of the things that the subcommittee really looked at was that we didn't want to get in a situation where based on having a separate unit plot that someone would be developing on, that each one would be unto itself, right, responsible for its roof and landscaping and all the other stuff. So there is a more traditional condominium approach in making sure that the entire parent parcel is in under this other umbrella, so that there are dues and fees that are collected to make sure that those common interests are taken care of. Sure. Because what in the early days of the site condos that were done in town, those fees weren't really collected except for snow removal. And so there was no roof maintenance, there was no exterior painting, siding, so when those things started to fail, they were on the individual unit owners. And if you had someone who had lost a job or was a single mom with 3 kids, all of a sudden she's in a position where she's in a tough spot if the neighbors are not taking care of the property and can't afford to do it. She goes to sell hers and it's surrounded by crap, so to speak. On the record, I guess I said that. So that was a real dilemma. So one of the things that carried through from the beginning with the subcommittee was that quality really was an issue. This also gives another thriving benefit. Condominiums are owner occupied most of the time, but as Jim said, there's a qualifier, or said there's a qualifier for within the condominium to be able to get to be financed in a certain way. You have to have a certain amount of ownership. And we found around town some of the condominium projects have fallen below that. One in Eagle River, Fire Creek Estates, a condominium project there that was done. And we were having to meet with their organization because we were doing a project on adjacent property. And in reality, they had fallen way below their mandatory requirement for ownership and owner occupation. So they found it fall out of this qualifier, and it really makes it tough for people that are there. Whereas this option maintains it from a neighborhood standpoint. You do have a yard, or you can, in sorts, which is kind of a quasi-American dream, even though it might be a small patch. So it is just, again, another tool, but I think it really reinforces ownership as a possibility, flexibility, lower risk for the developer from the holding and financing costs, and we get the actual buyer a lower mortgage interest rate. So one of the key things that we found through all of our surveys of businesses in that is that one of the big hindrances we have for attracting new talent and retaining talent here is the quality of the housing and quality of cost, and that it is relative. And this is another thing that may help plug one of those holes.
I have to add one bit. While you are legally allowed to build in a phased development like that, I don't, Seth, I don't know, you or Tyler might chime in. I think more than likely what you're going to see in Anchorage especially is infill development like this. It's going to be built all at once by one developer and then sold because these are 3 to 5 unit buildings.
Yeah, and I would just add that that's why there's an 8-unit cap. I mean, we see this as a tool particularly targeted to infill situations. So it's not, you're not going to do a 40-unit lot subdivision. That's not what we're proposing here today. That said, setting up a condo association for 3 or 4 units is a lot of effort. And Jim does a great job making it as painless as possible, but it's still effort. So we think this is an opportunity to, again, hit that small size. It's really appropriate for our dominant lot sizes in Anchorage. To get some of these things actually investment in these areas.
Fred, you had a question?
Is this almost synonymous with the terms zero lot line? And is that already addressed in the code?
I'll let Jim answer that one because there's a nuance to it that an attorney can do better.
There's big differences. The zero lot line ordinance, as I understand it, treat personally benefit. So I don't know if it's still on the bills.
Okay,
It's not-
speak a little louder.
Oh, I'm sorry. The zero lot line is all condos built on a road, the kind of stuff that when we did the site condo ordinance, we didn't want to see, just every unit sticking right out of the road with their snub nose looking exactly alike. That doesn't work for this. These units are going to be built back into the lot with a common driveway. This could not be done under the zero lot line. However, it's very similar in the sense that you do have essentially a zero lot line requirement. Not a requirement, but a possibility. You could have, these may be individual cottage homes. I think that's a great flexibility, which you wouldn't have with zero lot line.
Okay.
But you couldn't do these as zero lot lines because they all front on the road.
And did you say that zero lot lines are condominiums? Did you?
No, they're not.
Okay, all right, I'm clear, thank you, that's helpful.
After, I think Chris's question, can I go get
Yep.
to you?
We got 13 minutes now. Okay, Pete, any questions?
Thank you, Mr. Chairman. So we've got, say, a half dozen units on a lot, and so, say, for a first-time home buyer, it makes it easier for them to qualify to buy one of these units, or not?
I don't think it does, but I would address that to the lenders.
Well, the financing people probably, I don't think that makes any difference as far as their qualifying. It just makes more properties that might qualify for them to get into.
The benefit to the homeowner would be that they could qualify for a higher cost. If their costs are lower, insurance and everything of their expenses are lower, meaning that they can qualify for more. So that's one of the issues too, is our construction is so overburdened by cost, whether it's regulatory, land, that the builders aren't getting the margins, right? I mean, it's just, those margins are shrinking. Well, if we can raise values by selling them for more or whatever, then, that helps the builders, the segment of the market, and then also to the buyers. So their unit are worth more, they can pay more.
Yeah, and I would also add, Pete, where it affects it is the example that we've heard, like the duplex on the lot, because it's the simplest thing to do. But what you do there is you build 3-bedroom, fairly large units, and to maximize all your development costs. Well, that larger unit doesn't appeal to a young family, a new family, right? So I think this tool allows you, not everyone's going to do it, but allows the potential to do smaller units themselves, 1 or 2 bedroom units, which then from an affordability standpoint meets what our demographics are actually telling us, right? There's a mismatch right now between the demographics and what people, because of a whole series of rules, are building.
So we have higher demand for these type of units, smaller units out there, and so this would help fill in that market.
We would test, it would be tested, right? We would know for sure.
Let me add on to that. One thing that I left out is the Live, Work, Play Housing Group has done extensive surveys over the years of employers and employees, asking the employers, what do you need to retain your workforce, and then asking employees, what kind of housing do you prefer, where do you want to be, what are the amenities, et cetera. So one of the things that's been overwhelming is that people want to live closer to the urban core, so Fairview, South Addition, downtown, and they're willing to live in smaller spaces, which a unit lot subdivided property could possibly be, but also has a modern look, feel, amenities, et cetera, which if you had to shop for a house in the past decade, we don't have. So I think that it's meeting a demand that isn't currently being met.
Okay. We have a lot of pent-up market for this type of unit. I cannot recall when the last time anything under $250,000 has been built in Anchorage. It's going to be quite valuable to folks.
So basically, it diversifies our first-time home buyer market, right? It diversifies the product type that we have there. Because we're very, very stuck on what we can provide to that first-time home buyer market. This just diversifies that.
And one thing about it is right now we have 470 single-family homes on the market, which represents a 2.5-month supply. We need houses.
Thanks, Mr. Chairman.
Thank you. Christian?
Yeah, two comments and a question. Just to your point about the condo versus the fee simple or the ability to buy the land, I know two individuals right now who are trapped in a condo. They can't get out because their ownership in their unit is, rentership is higher than ownership. They're stuck, and it is a terrifying thing for people who are leaving the state and there's no market. They can't get financed. Someone has to walk up with $200,000 of cash in order to buy in. And so this helps to resolve that problem because that the ability to finance the project personally is really important. And so this is a solution to a problem that I'm seeing. And the affordability is one of the key benefits. The first-time homebuyer is limited around $350,000, right? There's a ceiling on how much you can finance as a first-time homebuyer in Federal Housing Authority. And if you look at the marketplace, there just aren't that many units available that are below that number, especially that are quality and reasonable. And I have a question. The site condo discussion came up, and I've had this discussion with a number of people, in particular in the communities that these projects are probably going to land in. While I believe that most developers are quality and do good work, we all know that there are some that don't, and they're going to find every crack they can find to exploit, to maximize profit and not deliver necessarily quality product. Quality isn't their goal. What are the potential threats or negatives that you see that might come up through this process? Because that's not addressed in your presentation.
Well, I think the risks are that the first ones out of the gate aren't exemplary projects. I mean, the reality is, if you can do it, we're not changing the zoning code. So, there's despite our efforts and to make changes to Title 21, you can still put a pretty ugly looking structure out there if that's what you intend to do. So I think our hope is, the examples that Seth has shown and that he's worked on specifically, our hope is that we can actually show and demonstrate how to do these well and tap a market that as Art said, is sort of untapped. The ordinance requires a homeowners association. So the city will not allow you to record a final plat until you've shown evidence that that homeowner association has been set up and put together. That is going to, those rules are going to still dictate, how the whole development needs to be maintained. You can't have one bad egg in the development, if you will, and Jim can speak more to that if you have questions. So that's the sort of precautions. I still also think no matter what, putting 4 units up on an infill lot, some people won't like it, right? Even though that technically you can do it today, or you could even build 8 today, because maybe there's a single family home next to it, right? In a Fairview or Subdivision neighborhood. So there's always risks, but the risks are inherent there today. I think if anything, we're mitigating risk by providing this product type.
Well, if I could add to that, we talked about that. I was in the background of the site condo ordinance. And just one comment on that ordinance and on this topic in general. Just because something is a site condo doesn't define the obligation of maintenance. I can do site condos that have just as much protection as a traditional condo. That's a highly misunderstood area. But we are requiring the association on all attached units to maintain all of the exterior siding, roofing, and so that's a requirement. There are no options on that unless they are detached units. If someone does 6 or 8 cottages, we didn't feel like it would work as well. We could allow more variety, which I think we lacked in Anchorage at times, is to have some little bit of diversity. But those are people just like you have in a subdivision that own their own home, their own lot. And so we thought in that case, we wouldn't have the association maintained, because you could have a wide variety of different roof siding, etc. So we did something that precluded the things that went on, because there were some developers. There's always the 10% that creates 90% of the problems that put in site condos. And for some reason, they thought that was the great solution. I could have done it either way with either stuff, but the reality is it's making sure that maintenance gets done. And if there's money there, so when the roof is needed to be replaced or the siding needs to be replaced, there's money there. So we addressed that in this ordinance.
One more thing to that, the liability is going to be the individual homeowners, as it is with every property. I mean, you could live right next door to somebody that has a great, nice, wonderful patch of dandelions where you don't want them to be. That's inherent in living in Alaska. One of the things that there are some of these subdivisions set up down south that seem to be quite successful for some time. And this is not new news.
So just a quick follow-up, have there been examples of these projects that you've studied that didn't work that you can share, what the pitfalls were?
I don't have any examples of ones that were not successful.
I did a lot of reading about it, because I was curious about that when I first heard about this. I think that Tim pointed out something that what happens right now is that, and I'm a classic example, I live downtown, I have a 2-unit condominium with a gigantic backyard. If someone were doing a lot like that, my particular zoning would involve like that. What the complaint I heard was in some newspaper articles and other anecdotal stories was that people used more of the lot. It's something they could do right now, but they're not. And so some people did complain about that. They didn't like having just the entire lot built as completed buildings. So that was that. And then there was a concern about parking, if they were providing adequate parking.
If I can add to that, I just came from the Urban Land Institute conference in Seattle, and one of the topics discussed was unit lot subdivision infill throughout Seattle. Now, Seattle is a much different market than ours. The housing pressures there are obviously a lot stronger right now. But by and large, the only downsides that were discussed during this conference were parking, because that's at a premium in Seattle where they don't have to provide parking, number one. And then number two, because Seattle is beginning to upzone a lot of its property, allow greater densities in some of the traditionally single-family neighborhoods, there's that conflict. And I think that's going to be the big hurdle, like Tyler identified for the first project out of the gate, is how is the neighborhood going to feel? And never mind that by right, they could do this. By right, they could do a boring fourplex. But it's that change that will be, I think, the biggest challenge for us and for whatever project goes first, by and far. But as far as any issues related to, the home ownership structure or the common area, not common area, but the maintenance agreements, so far there hasn't been much.
That's helpful.
Just the other comment I'd like to make, and I'll go ahead and use a name because I've said it many times in public places. There will always be a Lee Baker that comes along and presses a loophole and does the wrong thing to make a profit. And when you try and ensure the best you can, as we tried to do with this ordinance, because of the experience that we had with he and others that developed in a similar fashion. That doesn't mean that this is 100% cured. And I would request that the Assembly understand that part of the responsibility is that if we see that there is something going sideways and a Pete Zamorello or a Lee Baker has occurred again, that we will come back to the Assembly. It's incumbent upon us to react, and I would hope as well that it's incumbent upon you to also react quickly so we can plug that loophole, which did not happen with the site condos for too many years, even though it was a known problem.
Thank you. Actually, Boris had a question, but I just follow up on this, some of the risks we have. Speaking of Lee Baker, I think Denali is probably keenly aware of the problems there.
I wasn't there that time.
That's
my disclaimer.
But so I thought about this. I mean, perhaps a developer has a lender for the overall project, and then each individual home has a different lender. And suppose the developer goes belly up, and 3 of 8 homes were built, and the other ones maybe partially. Who carries a risk? Where does that leave the 2 homeowners that are in there, living there, and you've got these other ones not developed? Is this a new kind of risk?
It's actually a mitigated. This type of project gives, it's way more desirable in that situation for a lender. We can get control faster. You know, in a condo association type situation, and I was at Northland at the time, and we took over plenty of his projects over there as well. And they were only half built. And so it was horrible getting through the city, and not just because it never happened before, but, and then also to the homeowners association process. And you could only sell to one person. That project could only be owned because of the declarant rights and everything else. You literally had to have somebody come in and take over that whole project. In this scenario, that's not the case. You have way more control. You can react faster, and you can preserve and responsibly make decisions how to get that housing back into the market responsibly as a lender. So from a lender's perspective, this type of housing is way less risk than a condo development. In that, because as lenders we think worst case scenario, especially after Lee Baker. So, and when we look at these, we know what not to do, and this is very desirable. And mostly because we have reputation risk as well. I mean, we remember Denali, obviously, but that's important to us. So we make decisions based on those types of things. How much risk we'll take, you know, and a development like this, we're likely to take more risk because we can control that risk better.
Thanks. I didn't mean to disparage Denali. I think it's a fine question. I just know you had a painful experience there. So, okay, Forrest, you had a question?
Yeah, Dean has asked me to, and I'm curious as well, to ask how this differs from the provisions already existing in code under 2108-070 dealing with cluster housing and narrow lot housing. Can planning people speak to that?
Well, I'm sorry, but I think that, you know, first of all, that's a newer provision in the code that I don't think has been utilized a whole lot. I mean, that was an idea that we would encourage more of this kind of smaller townhouse, fee simple subdivision. But that's still, I think, as I heard earlier, maybe Jim said, it's still kind of really predicated on having those units face streets and kind of subdivide, you know, if you will, front to back in a more traditional way. This allows the flexibility to go front to back and chop it up in a variety of different ways, where you're still just meeting the code with how that multifamily structure would be permitted under the code. I mean, it's all. I mean, maybe I'm not explaining it well, but it's totally different. Both are really important. I think there's some problems with what we've said the townhouses, you know, actually need to think. We've not allowed them to get small enough actually to make it practical. So this would be an alternative. You keep the same parent lot and effectively have smaller unit lots than what is allowed there.
Are they totally different because this is for single family, or and whereas this is for the multifamily condo projects? Or I'm still not quite understanding why they're so different.
You want to jump in?
Well, of course, there's actually quite a few things. Most of it's just within the regulations for narrow lots. You know, like just throwing a couple, the lot area and width. The narrow unit lots will be a little more flexible. You know, there's going to be 30 feet wide, 80 feet long. There's height limitations, lot coverage. The unit lots are a little more flexible.
And that goes back to the way that the zoning requirements apply to the parent lot, setbacks, etc. But then as unit lots subdivide, you're not having to repeat those on a per lot basis, which gives some flexibility. In the narrow lot that Sean was referring to, that's a single lot zoning designation that has requirements tied to each lot.
And of course, the cluster subdivision, that was always envisioned to be where you're dealing with a physical challenge on the site, whether it's steep slopes or wetland or something else, and you'd effectively take, say, the total square footage of the site, say it's 5 acres, and you could build at 4 or 5 units per acre, and then you take and leave the wetland alone, avoid the steep slopes, and cluster the same number of units on a smaller piece of the property. So the overall number of units would not change, but they'd be clustered together. And you could do those even with a common wall in some cases. But it was really looked at more of a single-family type of solution to challenge properties that had physical constraints on them.
Thank you.
Any other questions for Ms. Emmons? Any other comments from the group here? A couple of questions. And I had sent you have there's a big section on the CCNRs that we require in that. And did you write those up? Or where'd those come from? Because I sent those to a property manager and she thought they weren't awful, but she had a few comments.
Okay.
But I mean, where did those come from?
I probably set them and I put those together.
What were her particular comments, John?
Okay, if you want to look, it was page 6 and 9, and if you looked at say the line numbers may be off because she has some. Look at section D, and she's not an expert. She manages properties, so she's coming from it not as a knowledge of how ordinances should work, but just from her practical experience.
Section D is in dog.
Yeah. So that's this is page 6, 9, 30. And she said at the end of that she added, repair or replace these components, and which puts the homeowners association out of compliance with the state of Alaska and municipality of Anchorage. So this is what they have permission to repair and replace. So I think she's worried there's state laws that also apply to these things.
Well, there is we are coming under the Uniform Common Interest Ownership Act. And under that act, there's tremendous flexibility. That Section D, that particular section, is, I think, going to be more a case where you would have detached units which the homeowner is maintaining. But for some reason they don't. It gives the association the right to step in and make those changes, whether it's repair, replacement, maintenance, which are generally the three terms you use. It is tough for an association to do that, but it does give them an option.
Okay, and I think
And it doesn't violate the state law.
Okay, I think her point is, here's the trigger for when can the homeowners association step in.
Right.
If the homeowner's not doing their job, HOA steps in, and she would add to those if there's something that would put them out of compliance, the HOA out of compliance, or break state or municipal laws. So those would be additional triggers for them to be able to. Does this make sense?
Is she asking if an individual owner in a unit lot subdivided property does something to their piece of the property that puts the site out of compliance with municipal code, that's when the HOA can step in?
That would be an additional trigger, right? I think that was her thought there.
Well, I'm not sure what her comment is. That's a pretty common provision that we put into things that we have done as planned communities or even site condos to ensure that the maintenance gets done. I'm not aware of any legal restriction.
There's a condo development in my area where one of the homeowners is running a auto repair business out of it. Fully residential. They got 6 cars in the garage. They got mechanics coming in the day. And of course, it's totally out of character. It's a mess. It's a very nice dog. And the HOA doesn't feel like they have the ability to go in and shut it down. I think that's the kind of thing that she's getting to. Is there a wording in here that would give the HOA?
That actually would probably be a violation of municipal code,
Right.
and it wouldn't be up to the HOA, it'd be up to any individual citizen to lodge a complaint with code enforcement for investigation.
And the
That has to be
association will
successful.
enforce it also, because the covenants for these projects are going to be like most of the other covenants we do. They're going to restrict the use of the unit for business purposes. Most of the time within the municipal limits, that's covered by zoning. But in addition, can do to go beyond it, but in terms of just usage like that, we do restrict all of our projects to residential use and a variety of other finite restrictions.
Okay, and then in section E, she recommends adding something, make the requirement that there be clear penalties and default remedies.
John, if I can, I mean, part of it is, I think that usually gets spelled out in the actual, in the documents themselves, right? I mean, these things are probably, having worked with Jim on a condo association, I mean, these are not 3-page documents, right? And so I think that the question is the level at which we want to hit the generalities here, knowing that the actual CC&Rs for the homeowners association is going to contemplate a whole heck of a lot more.
Well, grab B on this is you look at other sections of code, I think with the condos and so on, and we'll say there must be an HOA. And then we don't say anymore. Now we get to this, we go, there must be an HOA, and now we go down the slope where we have all kinds of detailed requirements. So that leads to more detailed requirements. Art?
This is going to be in municipal code, and the other parts of municipal code cover that problem with the garage. So all this is supposed to be in compliance with all municipal codes. So this, I guess you could add this here, but I don't see where it would be necessary. And certainly the homeowners association, as they develop their CC&Rs, can add more restrictive codes as they go along. And rather than getting this so complex that it's more difficult to deal with, this certainly gives them the authority to do so, but without demanding it, I would think.
Well, I think this gets back to Chris's comment. What are the risks? Where are the failures? And the other things talk about condos, you must have an HOA and it's very quiet. But on this one, we go, you must have an HOA and we have this extensive list of things that must be in there. Is that because this is so risky? Or why does this get it spelled out so specifically in other types of developments?
Because it's a learning experience, and as we've gone along, we've learned more.
Well, and it was my suggestion, and I think we're trying to avoid the problems we had with some of the site condos. And so I said, look, when I go in front of the assembly, we go in front of the assembly. If I'm an assembly member recalling the problems that we created, why not just address it in here? Obviously, we're not going to put everything that we have in a 60-page document, but we're going to cover the basics and make sure people comply with the maintenance requirements.
I think the reality is that we are really knowing what we know from past experience. We try to establish an appropriate place for a minimum standard of where the bar is that everybody has to get over. And that's the reality. Now, I don't know that we need to get to the detail if, in fact, a person could have a garage in which he does repairs to other people's cars than his own as a home occupation on a limited basis. I don't know that we need to get into that kind of detail because it may never come up or it might come up. But that's something that can be enforceable because there's very strict provisions in the code already about how that business has to operate.
Okay, Art?
And we have to keep in mind where we're putting these things. These things are going to be infill, so we're trying to give us greater comfort level to the people that are going to be surrounding these things as can possibly be done. And that's, I think, part of the reason for maybe a little bit more restrictions.
Okay, so leading from what Jim had said, okay, we've learned that we need these. Should this kind of section be added to the other parts of code that just say have an HOA? Should we embellish those with this?
I think that's a little bit outside of the scope of this work session, but that's a very interesting question.
Okay. Well, I would talk to Sean about this and think maybe that's too much between now and Tuesday, but something to think about is how this section.
Let's have a different discussion.
Okay, Chris?
Yeah, I think part of your concern is addressing the fact that these aren't common interest properties, right? They have to come up with a mechanism to create essentially a parallel to what a condo association can have because they collectively own all of the property, right? And so the reason I think one of the values of having it spelled out so clearly here separate from the condo is because these properties aren't owned in the same way, right? The territory that's under easement, under rules, that stuff has to be guided in some way. And so I think that's one more reason that this is so clearly delineated.
Okay, we're getting near closing time. Any other comments from anybody? Thanks for coming, everybody.
Just real quick before you close out, Mr. Chairman, as I mentioned, we do have representation from AWU and some financial companies and title companies. If you have any questions related to how that is handled, now is a good time to ask.
Did you, Mark, do you have anything to add?
Well, from AWU's perspective, this HOA agreement, whatever you call it, is very important to us. Because without it, these become individually served units, which drives the cost up. We're okay with serving individual units, but the idea is to have one extension to the property, dividing the cost up, making these cost effective. The only way we can do that is somebody is responsible for the maintenance of the extension. You can't put that on any individual owner. You can put it on an association that will be responsible for the maintenance. So that's what is important from our perspective, that these developments have HOAs of some sort.
Okay, so to be clear, so the HOA is your customer in these situations?
No, not necessarily, but they will be responsible for the extension maintenance.
Okay. Anything else? Commander? Okay,
Thank you.
good?
Yeah.
All right, appreciate it.
For assembly members, Amy just sent you notification. The police memorial is today at 3 o'clock to 5 o'clock. If it wasn't on your schedule, it's down the Martin Luther King Street, 4805, Dr. King Boulevard. What they do is they read off the name of the fallen police officer statewide, and it's a good thing for us. We've got the time to show it. Start at 3 o'clock. That's all.
Good, thank you.